Every barrel of oil sold on Earth touches the same currency, whether it's pumped in Riyadh, refined in Rotterdam, or burned in a taxi in Lagos. Not because oil is American. Because for 50 years, the world quietly agreed to price it that way. And that single, unglamorous agreement has done more to keep the United States wealthy than its army, its tech industry, and its stock market combined. You've never bought a barrel of oil in your life. It still shapes your rent, your grocery bill, and the interest rate on your car loan. That's not an exaggeration. That's just how currency plumbing works, quietly, underneath everything. Here's why this matters right now. Not in some abstract textbook sense. In 2024 and 2025, headlines started circulating that Saudi Arabia had walked away from its decades-old dollar arrangement, that the petrodollar system had officially ended. Social media called it the end of American financial dominance. Some of that story is true. Some of it is myth dressed up as breaking news. Untangling which parts are real is exactly why this topic matters today. Because the answer changes how you should think about inflation, the dollar in your wallet, and the next decade of the global economy. So let's build this from the ground the same way the system itself was built. Go back to 1971. The United States, under President Nixon, does something quietly radical. For decades, the dollar had been backed by gold, meaning any country holding dollars could, in theory, trade them in for actual gold sitting in a vault in Kentucky. In August 1971, Nixon ends that. The dollar is no longer backed by anything physical. It becomes what's called fiat currency, valuable simply because people agree it's valuable. No gold, no silver, just trust, printed on paper. That should have been a problem. A currency backed by nothing is, in theory, fragile, so the United States needed something else to anchor global demand for the dollar. Something that would force the rest of the world to keep needing it, urgently, permanently, regardless of politics. That something was oil. In 1974, following the 1973 oil crisis, when OPEC nations quadrupled prices and crippled Western economies almost overnight, the United States and Saudi Arabia reached an understanding. It wasn't a single signed treaty with a dramatic title, and that retail matters, we'll connect to it. In exchange for American military protection and access to US weapons and technology, Saudi Arabia would continue pricing its oil exports in US dollars. Not Saudi riyals, not gold, dollars. Here's why that single decision was almost absurdly powerful. Oil isn't a luxury good. Every country on earth needs it to run factories, planes, cars, power grids, everything. If oil is priced in dollars, then every country on earth, regardless of whether they like the United States, regardless of their politics, suddenly needs dollars. Not to trade with America, just to buy fuel. Japan needs dollars to buy oil. Germany needs dollars to buy oil. India, Brazil, South Korea, all of them needing dollars constantly just to keep their lights on. That single arrangement created a permanent built-in global demand for US 999. Currency that had nothing to do with anyone actually wanting American products. This is the part most people never connect, and as the actual mechanism, not the folklore version. When countries earn oil revenue in dollars, they don't just let those dollars sit in a drawer. They reinvest them largely into US Treasury bonds, US real estate, US companies. This cycle is called petrodollar recycling. Oil-rich nations sell crude, collect dollars, and funnel a significant portion of those dollars right back into the American financial system, buying US government debt, which means, quietly, for 50 years, the world's demand for oil has helped fund America's deficit spending. The United States has been able to borrow trillions of dollars at relatively low interest rates, partly because there has always been a reliable structural buyer for that debt, oil exporters, sitting on enormous cash surpluses, needing somewhere safe to park them. As of recent treasury data, Saudi Arabia alone has held well over $1 billion in US treasury securities, a number that fluctuates but has remained substantial for years. Sit with that for a second. Every time you've heard a politician warn about the national debt, part of the reason America has been able to carry that debt so comfortably for so long traces back to oil, priced in dollars, funneled back into US bonds. The petrodollar system isn't just about oil. It's the quiet financial engine underneath America's ability to spend more than it earns year after year, without the usual consequences that would sink almost any other country attempting the same thing. Now here's the uncomfortable math, the part that will genuinely reframe how you see this. Because the dollar is the currency oil trades in, it's also by extension the currency most global trade settles in. Roughly 80% of oil trade still happens in dollars today. That built-in demand keeps the dollar artificially strong, which keeps US interest rates lower than they'd otherwise be, which makes American mortgages, car loans, and government borrowing all cheaper than they would be in a world where the dollar was just one currency among many. You benefit from this every time you take out a loan, whether you've ever thought about oil or not. But strength has a cost, and it's a strange, almost ironic one. A permanently strong dollar makes American exports more expensive for the rest of the world to buy. It's part of why, for decades, the US has run persistent trade deficits, inputting more than it exports. The very system that lets America borrow cheaply also quietly hollowed out chunks of its own manufacturing competitiveness. The petrodollar didn't just buy America financial power. It bought that power at a price most Americans were never told they were paying. Now let's separate hype from reality, because this is where the recent headlines get genuinely messy. The hype, the version spreading across social media in 2024 and 2025, claimed Saudi Arabia formally terminated a 50-year petrodollar treaty on 9 June 2024 and that the dollar's global dominance was collapsing in real time. That version makes for a dramatic headline. It is also largely false, or at least badly oversimplified. Independent fact-checkers, including researchers at outlets like PolitiFact and Radio Free Asia, traced the claim back to social media posts and found no evidence any formal signed petrodollar treaty ever existed to expire in the first place. The 1974 arrangement was never a single binding contract with a renewal date. It was an evolving, informal set of military and economic understandings. The reality is quieter, slower, and in some ways more interesting than the viral version. Saudi Arabia has, over the past several years, genuinely diversified. It's held talks about accepting yuan for oil sold to China. It's joined expanded economic blocs like the Shanghai Cooperation Organization. Central banks globally have been buying gold at the fastest pace in decades, partly as insurance against over-reliance on any single currency. The dollar's share of global foreign currency reserves has slipped from around 71% in the late 1990s to roughly the high 50% range recently, according to analysts tracking the trend. That's a real shift. It's just not a collapse, and it's not sudden. It's a slow erosion, not a cliff edge. Here's the irony sitting quietly in the middle of all this. The louder the internet shouts that the petrodollar is dead, the more it reveals that most people never understood it was never a single signed piece of paper to begin with. It was always something closer to a shared habit, reinforced by military alliances, financial convenience, and decades of institutional inertia. Habits don't collapse in a headline. They erode quietly over years, sometimes so slowly that by the time you notice, the world has already changed underneath you. Now zoom out, because this stops being a story about oil contracts and becomes a story about leverage on a scale most people never think about. If global demand for dollars ever meaningfully weakens, whether through oil diversification, gold accumulation, or new trade blocs settling in other currencies, the effects wouldn't stay confined to Wall Street or Washington. A weaker structural demand for dollars could mean higher U.S. interest rates over time, since the government would need to offer more to attract the same buyers for its debt. Higher interest rates ripple directly into mortgage rates, credit card rates, and business loans. For ordinary people who have never thought about Saudi oil exports in their life, the petrodollar isn't some distant geopolitical abstraction. It's part of the invisible scaffolding holding up the price you pay to borrow money anywhere in the American economy. This is also why nations like China have spent years quietly building alternatives, not to replace the dollar overnight. That's not realistic in the near term, but to reduce their exposure to a system where a handful of decisions made in Washington can ripple through economies that had no seat at that table. De-dollarization isn't a single dramatic event waiting to happen. It's slow redistribution of trust happening in the background. One bilateral trade agreement, one gold purchase, one currency swap line at a time. And that's really what the petrodollar was, underneath all the geopolitics and bond yields. Not a law, not a treaty carved in stone. A 50-year bet that the world would keep finding it easier to trust the dollar than to build something else. For decades, that bet paid off, spectacularly, quietly, in ways almost nobody watching the price of gas ever noticed. So here's a question worth sitting with, long after this video ends. Trust, once built at that scale, rarely disappears in a single dramatic moment. It erodes, slowly, decision by decision, until one day the foundation isn't what everyone assumed it still was. If the world is already quietly hedging its bets against the dollar, the real question isn't whether the petrodollar era ends. It's whether anyone will even notice the exact moment it already did.